stone. We make adjustments to those levels. We add, subtract. We um, find price action opportunities to use as well. So between the price action opportunities that the market creates for us, plus the levels that we give out here, are a guide for us to give us trading opportunities or setups, whichever way you want to state them. And combination of the setups plus the levels give us trades. We're looking to scalp the market, so consequently, we're looking to take a little bit here, a little bit there out of the market, like 2 to 3 points, depending on volatility. Somebody already told me that the VIX was up at 22, which is better than the way it was going. Obviously, we're down here. And every time the market goes down, the VIX goes up. And for us traders, as far as scalpers are concerned, especially commodity traders, which is what this is, we always need volatility. And VIX is an index of volatility. At least that's what they say. And it gives us opportunity to trade. So the higher the VIX, the better it is. Obviously, a little bit more volatility, but traders, as far as traders are concerned, they like volatility. We do anyway, and consequently, that's what we're looking for. But we don't always get volatility because it just doesn't always work out that way. So we'll see what happens here as the market slowly upticks a little bit. We got a little resistance around the 70 area. And we'll see what it wants to do around this. So again, we're trying to take scalp the market. So we're trying to take 2 to 3 points out of our trades, if possible, with the same likewise amount of stops. And we're looking for about 4 to 5 trades in the course of the day. We don't believe markets go straight up or straight down. Consequently, we're looking for those opportunities, those inflection points that the market creates while they're trading to give us those chances to trade. So, and again, between the levels plus the price action opportunities, and again, price action opportunities occur using technical analysis that we have. So between both of them, we'll see what happens. I would assume, I think that's about right, as long as intelligence is spelled right. It is a long name. I don't know why, but yeah, it is a long name. Sounds right to me. Trust me, I've spelled it wrong many a time, and I can never. I always have to go back and try to figure out why isn't it working. But that is what it is. All right, we're just drifting around our pivot here. Could we, if you missed our levels, if you look at the chat box area, there are levels written down for us. Same levels that we kind of use as a guide during the course of the day. Again, like I said, nothing here is etched in stone. We can adapt to them, we change them, subtract to them. Sometimes don't use them at all. Again, all based on what the market is telling us. We're very market kind of trying to read the market and let the market give us opportunities. And patience is important. Yesterday, we had to show some patience before the market actually kind of decided to get some legs and move around a little bit. As the market now, we thought we were going to get the 70 area and quickly comes back down here. And now we got the 56 area on the downside here. So it's kind of all over the place. So we'll see what it wants to do. Again, if anybody has any questions, feel free to put them in the chat box area. The chat box area is where I can see them. And I'll be able to see those fast because I have the chat box window up and running. All right, so we're a little bit choppy here. We had 70 above. It got up to 68 and change. Came back down. Now we're coming back up here to our pivot, so kind of a little bit quiet here. Again, the most important thing is to be patient, wait for the opportunities. It's one thing that we have to try to remember. Above all, is to have some patience and wait for either the level to get triggered or a price action opportunity to get involved in. All right, quickly has come back up here now to the highs. Very, very choppy. So again, we're missing our entry points by just that much. We got down to 58 and change and then pop back up. And then coming back down up here to the, well, we have 70. So getting a little bit choppy here. Market is a little bit, kind of doesn't know what it wants to do. Again, whatever we do, you keep your stops in there because, we are, at any moment in time, we could have some volatility and some movement, happens all the time without any warning as we come up here to the 70 area now. So if you are trading here, with us, see what it wants to do up here. Again, make sure you keep your stops in there. We'll see what other news is coming out this morning. Let's see. Coming up here and test. Oh, there we go. That was a nice quick little dip there. If you are trading with us, that's what we're trying to do here. We use our 70 area there and a nice little rotation off of our 70 area. So nice little trade there. Hopefully you were able to get in, gave you plenty of opportunity there to get in. And if you're trading multiple contracts, this is a way you can eke out a little bit more than 2 or 3 points. Like I said, you have to trade multiple contracts, obviously, and you scale into it and you scale out of it. This is what this is a nice part about this little move here. You get the added volatility, and this is what happens, right? This is where you can definitely take more than 2 or 3 points on some of your contracts if you're trading multiple contracts. Okay, obviously, if you're trading one contract, you're taking whatever your stop or minimum is, and then you go on from there. But if you're trading multiple, you can scale out of one, scale out of another. You easily got 4 or 5 points out of this one, and whatever is left over. So nice little trade there. Hopefully, this is what we do here. We're trying to find these inflection points. We don't believe markets go straight up or straight down. Consequently, we're looking to find these areas that'll give us an opportunity to scalp the market. Support and resistance. Obviously, resistance is our sales, and obviously you have to have the order in there. But it did actually give you a chance to sell it again. But hopefully, if we like to have our orders preset in the market at around the level. That way, we have the ability to when it pops up there and pops back down, we're in. Sometimes it works out that way, sometimes it doesn't. But if you wait for the second rotation up to a level, sometimes you never get it. All right, so nice little rotation there against our first resistance area. Coming back down here to our pivot. If you did buy, maybe dip your toe there against our blue band there, against our pivot as well. Maybe you bought them down there. If you did, getting long there against that area. Again, that is one of our trades that we like to talk about, that some of our traders like. So if you did partake with that nice rotation there off of the pivot area, again, also our blue band, then you did all right there too if you got long there. So again, we are just trying to find these areas. We put together a methodology that helps you find these areas and opportunities to trade. Yesterday, like I said, it took us like maybe an hour to find a trade. Today, obviously, we've got a couple quick trades here in the first 10 minutes. Just never know when we're going to get busy, right? That's the beauty of the beast here. Sometimes it's easy. Sometimes you have to work. But this is what it is. It's not easy. Let's put it that way. I mean, easy in the sense that we get a quick rotation off of our level. But like yesterday, we had one of our levels we had to actually babysit for a little bit, and then finally said, okay, this is not looking good. So we have to either get out for a small loss or scratch. And sometimes you have to make that determination. And it was tough to do because we didn't get a trade all day. And I'm telling you, okay, just get out of this trade because it's just not looking good. Sometimes it's easy like this one. Other times you have to actually watch it hang up there for a bit, go against us, hang, then boom. Whatever. It is what it is. Take the good with the bad, like I said. Don, it's the first 10 minutes of the day. Give it a break. Come on. No, Don's upset. He missed. He had 71. He didn't get that. And then he had 58. Missed that. So now he's having a bad day already. I hope he listens to me. Well, I didn't miss the 50. I had 56, so it didn't matter if he listened to me or not. I didn't get filled on the downside. All right. Market is a little bit, range bound here a little bit, which is fine. All right. Let's see here. Let's see. First of all, let's talk about if there's any economic reports coming out here at 9:00, which there isn't. GDP fourth quarter was out, but that was fourth quarter is not the initial. I don't think. I'll find out. And again, that did not make us move because that move happened way before those numbers. No numbers coming out here at 9:00. But these Fed guys are they must have vacation or something, because there's a Fed speak at 9:30, at 11. There is a big auction at 12. Another Fed speak at 12, and another Fed speak later tonight at 6. These guys have nothing better to do. So, and yesterday, part of the move I think that we had yesterday was partly because of the Fed speaks. So keep that in mind. And so when I say by Fed speaks, I mean one of the Federal Reserve governors is talking. And sometimes you get some market movement in the midst of that. In addition to all of that, today at I think it's 12:15 Chicago time. Biden is going to have a press conference. So definitely be careful of that as we're hanging around our pivot here, 64 area. So yeah, so be careful of that if you're going to be trading later on, at around 12 o'clock Chicago time. 12:15 to be exact is when it's scheduled to. Now, who knows if they start on time or not, but that's another story. Anyway, so at that time, they're going to have, Biden is going to be having a press conference. So that could affect us, could not. But then we have a whole bunch of Fed speaks. All right, we got a whole bunch of Fed speaks, and they're talking, like I said, throughout the day. So that could always move the market a little bit. So you never know. Again, so we have Fed speaks throughout the day, in addition to Biden's thing, and then in addition at 12 o'clock is the auction of 70-year notes. So a whole bunch of stuff to be concerned about. So keep that all in mind later if you're trading. Again, we also focus on the morning hours to give us good opportunities. We feel that there's good ebb and flows during the morning hours versus later afternoon, where the market gets a little bit more thin. There's a lot less traders out there trading. So the morning hours gives us good bang for our money, so to speak. So this is a good headline. Something strange is happening to equity markets. Many have recently pointed out the Treasury yield hostage situation, where stocks have largely moved in response to the fixed income counterparts. When bond yields move up, high growth names sold off. But even as the rates have come down over the past 3 days, the tech sector is still under pressure. The equation is getting muffled. Some are even pointing to worries that the Fed hiking is in the far off 2023 is a concern, as the market is really choppy here. Again, this chop. It's very hard to trade. We got to wait for a price action opportunity or a level to get triggered. We got our level got triggered initially at 70 there, and now we're just kind of hanging here. All right, there, Dove. Thanks a lot. So bigger picture volume, the New York Stock Exchange volume has been 80% of the 30-day moving average, while the NASDAQ activity has been 90% of its average, remarkably low given the declines in certain sectors. Another example is Reddit. Darling GameStop tumbled 34% after earnings on Wednesday. No kidding. While only 23 million shares changed hands, well short of the 30-day average of 34 million, it seems to show that the retail customers have walked away. Really? The question is why? Is it higher rates, concern about the lockdown, or are they betting on March Madness? First of all, if you're going to use GameStop as your consideration of whether markets are good or bad, is pretty sad, actually. Bitcoin also fell for the 5th day against the dollar, down 6.5% this morning, marking its longest losing run since December. Many industry forecasts the government stimulus checks would be sent on crypto appears to be fading, while derivatives expire expires are adding to the volatility. All of this is top of record GDP growth predicted. Yellen and Powell reiterating on Wednesday that their pandemic stimulus is the way to go. As we continue to downtick here, support is at the 56 area. Trying to come down here to the 56 area. All right, got down here to the 56 area. Now let's see what it wants to do. And I give us a little rotation here off of our 56 area. All right, there's a nice little, very no risk rotation. Just the way we like it. Right down to 58 and boom. 56 and back up here to 58. Nice little quick rotation, and then 56 is the low there. That's pretty good. Can't complain about that one. Again, hopefully you have to have your order in there. Like I said, this is important. It's important that you have to have your order in there. Yeah, these today it's at least working for it. Yesterday, like I said, you had to work on it. You have to work it a little bit. Today, this is giving us nice little quick rotations off of our levels. Like I said, not every day is the same. Take the good with the bad. All right, so 56 worked very nicely. Next level on the downside we have is 47. Again, all we're trying to do is take little opportunities off of our levels here, 2 to 3 points, and then look for next opportunity. And if we had, obviously our 70, then we had a little quick rotation to our blue band earlier, and maybe this trade down here. So we've had like 3 trades in the first 20 minutes. That's pretty impressive for us. Like I said yesterday, though, a totally different picture. But again, you have to be patient, and always have to come back tomorrow. That is the key to being successful here. Yeah, I know you did. Don got his 58 finally. Hopefully, he got my 56 too, Don. As we're nice rotation here off of that. If you got in at the lower end as well. All right, so nice little quick scalp there for us against that level. We almost got up to 60 there. All right. All right. Again, if anybody has any questions, please feel free to ask. Always a good time to ask questions. So this is like kind of funny. These guys are like they can't figure out why the market's not moving, so they're trying to come up with different reasons, right? Could traders be waiting on the sidelines for better pricing? Are these pockets of the market that are still bubbly? Possibly especially given the extreme intraday volatility seen over the past couple of weeks. No, we haven't seen that much volatility over the last couple. What are they talking about? So this is when you know that the VIX is at 22 and they're telling, oh, we've had this great volatility. This is what they start doing. They're grasping for reasons why the market's not moving around that much. I mean, like I said, we're not even that much off our highs, so it's not that bad overall. No, it's just obviously NASDAQ's a little worse off. All right, nice rotation here off of this 56 opportunity. If you are trading multiple contracts and you're able to hold on to stuff, you're definitely getting more than 2 or 3 points on your trades. Obviously, you're taking profits, and then look at this move here. Wow, who knew? I wish I could have told you we were going to go back up to 67. I really did. I wish I would have shared that information with you if I knew that. That was a nice rotation there. Again, if you're trading multiple contracts, you're obviously, taking profits off of most of them, and then trying to hold on to some with a stop or a trailing stop or something to that effect. That gives you a nice little ride up here and take a lot more than just 2 points on your trades. But, you got to be able to do it every time. And sometimes it's not always going to work out. But when it does, it works out very nice. It's nice to see these bounces off of our levels yesterday. Again, but yesterday during the morning, they were also going up. So, we always talk about the the difference in the trade when the markets are rallying and when markets are, under pressure. It always seems to be better trade when markets are under pressure for whatever reason. Welcome to some of the new folks that may be just coming in here. We use our levels that we use as a guide for us in the course of the day. If you look at the chat box area, the levels are printed up for you. And if anybody has any questions, please feel free to write them up in the chat box area. I was going to say text them to me, but it's not a text. It's a little chat box area. All right, so all they did was try to tell us why the market's not doing what they think it's going to do. All right. So right now, next level on the upside we have is 78. For a second there, we're talking about our next level on the downside. Like, this is like so weird, but hey, it is what it is. What can you do? It's not weird. It just is what it is. We like a movement. That's good. We can't complain. All right. So remember, a lot of Fed speaks today. I'll just go over them. 9:30. So in a half an hour. 11. 12 o'clock, there is another Fed speak in addition to the 7-year note auction. 12:15, Biden's talking. So write them down, kind of keep these areas in mind if you're going to be trading right around there, or if you have a position term. We don't like to trade when numbers are released. So if there was a number released here at the top of the hour at 9 o'clock, we would have been trying to be flat. We don't like trading numbers. If there's going to be some volatility, it's bad enough that we have to trade when these Fed speaks are out there talking, because they always seem to get us one way or the other. Kind of holding both sides of our pivot, holding our pivot. Well, we broke from it. Now we're coming back to hold it. So very, very choppy, but it's fine. In the middle here, we don't have to really trade. It's kind of hard to figure out a direction to this thing. So there's really no reason to. As the market tries to extend here a little bit, we're looking at the next level above is 78. Quickly extending here a little bit. You're very demanding, Don. Extremely today. Extremely demanding today, Don. All right, we're waiting for the 78 level above as the next resistance area. Could you have bought the levels anywhere? The case for buying, well, the pivot. You could also make a case, if you're very aggressive there, to buying it above the 71 area. And there's a little buying opportunity there. If you bought the pivot, when it rotated back down there, got down to 64 and change. If you did, then could have made a case for it. So any trades that we like to put on, we do talk about having many reasons to have to trade, and you need to have a reason, a good reason to trade. We don't recommend just saying, the market is going up, I'm going to trade, buy it or sell it. If the market's going up, I'm going to buy it. If the market's going down, I'm selling it. You need to have a good logical reason to get into a trade, and we usually let the market tell us what that reason is going to be. So as long as we have a reason to trade, whether you wanted to get short or long, we definitely like to let the market kind of give us those reasons. All right, if you're a little aggressive there with the 74 area, the 74 area, just saying. Just saying about 74 area. Just saying. I love the 74 area too, but don't tell anybody. All right, now we can continue. The next level on the upside we have is 78 area. See what it wants to do up here. All we're trying to do is take advantage of ebbs and flows of the market. And again, keep your stops in no matter what. All right, that's always the case, no matter what the situation is. And we just teasing us here. Got up to just a quick tick there at 77, but I don't think anybody got any up there if you're trading in at 77 because there's just one little quick highball. That's a shame. That's a shame. You didn't get it, Mark, did you? At 77? Really? Well, you got in there sooner than I did. Nice. Good for you. All right, so we're still looking at the 78. We're still in the same bar. Now we got a new bar here, so it's a little bit more tenuous. So, if you're trading multiple contracts, maybe trade a little bit less than that, only because of the way it's trading. And who says there's no volatility? I don't know what they're talking about. We're actually getting bonds and equities to act inversely all of a sudden. When did that start to happen? Markets always surprises. All right, now we're getting up here to 78 again. Maybe. Spoke too soon. I should just keep my mouth shut. That's how you get trades. Every time I speak, I scare them away. That's not nice. What the gosh. Okay, I should have left my 77s in now. Did you leave the rest of them in there? I can't. All right. Teasing is up here at 78. Again, we scale in, right? So, half a point above, half point below. Some traders go a point above and below a level. Different ways of entering your trades. So that's why, we talk about getting a high end of the trade, low end of the trade, canceling, adjusting a little. We always adjust based on the price action. You can see here the price action kind of, got to 77, got to 77 and a quarter, and then broke. So now with the 78, now it becomes, especially on the low end of the entry levels, it's a little bit more riskier. So it all depends on how much risk you're willing to take there. And how you want to manage your trade. So you have to learn, you got to learn that we can manage it. You can cancel a level because we just missed it by just that little bit. Let's see. Yeah. I mean, that would not a bad idea, Glenn. All right, so nice rotation there. Unfortunately, if you got 77, then you got them. If you had 77 and a half, and then we broke off. So that's, I guess we can't be perfect, right? Like to be, but we can't. Support really would be down if you're looking for a buy area, and all the way down to 64, 65, which is our pivot. Getting aggressive if you buy the 70 area a little bit here, 69, 70 area. Again, if anybody has, you got bailed out. If anybody has any questions about anything that we do, please feel free to ask. So again, just write your questions down in the chat box area. And we'll try to answer any questions that anybody might have. Anything that I say, any trades that I'm talking about, any ideas that I say we have to add or subtract is a taught experience. We kind of try to teach you this methodology of what we're trying to do here. And any trade that we put on, there's a reason that we put on those trades. And we talk about our reasons in our class that we do in this setting at usually in the afternoon using live charts. Speaking of that, Peter, we have our class later on today. Okay, good. Mark, you're getting a shout out. There you go. Mark always feels left out, Like I asked Don to help me out the other day for an hour, and I got a little text from Mark. Well, you didn't ask me. You didn't ask me to help. So I'm glad that he's getting a shout out. He likes to be reassured. He needs it. Oh, okay. You're right. You didn't sound like that. Sorry. Close. Not exactly. Sure, Scott. I can give you whatever, talk about it. What we do here is we use live charts. We have a methodology that we like to teach. We try to, in our methodology that we're teaching, we're showing you how to find the levels that we talk about that we're using this morning. We also talk about how to find the different price action opportunities, what to look for, how to try to explain sometimes the market movement and what occurs, why it occurs. And the goal of the course here is basically to let you find the levels on your own, understand why you put them in, understand how to put them in. I work with everybody individually so that I can understand the risk tolerance in regards to, everybody's got different risk tolerances and how many contracts they trade and how they manage their trades. So I try to work with everybody to understand what their risk tolerances are so that you can maximize your profit. And, in addition to that, again, the most important thing is to have reasons to trade. That's very important. And we need to have multiple reasons. And when you have multiple reasons to trade, it gives you more confidence in putting in trades so that you can feel the key is to find confidence in your trading. And that, I think, is important. If we did buy our blue band there, just as an aside there, you're getting a nice rotation here off of that. It did go down to 65. And if you did buy them there, you're getting a nice little push. Anyway, so, and I do trade while I'm chit-chatting, so sometimes I get sidetracked, so I'm sorry. So we put together a methodology that allows you to do these things, to find the trades, to find the levels, to find the price action opportunities, and to understand why they happen, and then have reasons to trade. I work with everybody, like I said, individually to try to help them understand and try to find the key trades that you, as an individual trader, will use. And try to profit off of, because there's many trades that you can trade. The most important thing is that you be able to recognize those trades that you like, that individually can find them, and then you can trade them. So we show you a slew of trades, give you a ton of reasons. You have to find the ones that you can recognize, visualize, and then execute on your own. And then once you find them, trade the ones that you like, those trades that you like to trade, and how to maximize those profits so that you can take more than two or three points on your trades when the opportunities present themselves. We do it in the classes are done using real-time charts. We usually have our classes around 12 o'clock Chicago time in the afternoon, but I work with everybody's on their time scheduling because everybody has different time schedules. And but we try to use live charts, so we do it here about 12 Chicago time, and then we can use the charts and we talk about the trades that happen during the day and what to look forward to and how to adjust them, and just basically focusing on our how to find the trades that we're talking about, how to find the price action opportunities. So we show you in real-time charts all the things that we talk about so that you're not left hanging. And I hope that answers your question. All right, so we definitely dipped out there it was a nice little buy there if you were looking to buy the blue band. And a lot of nice little trades here, even though we missed the 78 by just that much. Look at the volatility. It was nice enough that it quickly rotated down here and gave us a little trade there against our 65 area. We said 65 to 64 would be support. Told you that before we got there. And then you had another reason to trade it based on our blue band. So we gave you multiple reasons to trade it. All right, well, at least we're moving around here a little bit today. That's a good thing. And like I said, yesterday, very slow, monotonous trade, nothing much going on. Today, moving around. That's why we always say in here, you got to make sure you come back here the next day. Very important. Well, the $100 a month is different than the education course. The education course is separate. $100 a month allows you to come into the trading room that we have, and you know, get the levels. You know, listen to me talk, basically, and then the $100 is for the trading room. When I started. When I was on the floor trading, I had always a bunch of people around me, and it was, I had contact. And when I started going to to trade up on in my office, it was a little bit quiet. So I started this trading room to get good traders together so that we can talk about different trades and they can throw ideas at me. And this is what this trading room is. And basically the $100 a month is for the trading room. The education is separate than that. That's another, that's a separate deal altogether. And again, Brad, who was on here before, can definitely talk to you about it and discuss what the cost is and everything for that too. So if you give us your contact information, like your telephone number, he's the only one that can see it, and so am I. So you don't have to worry about if you want to just give us your contact information. Somebody will reach out to you later and talk about that if any of that stuff interests you. All right, market again drifted quickly. Oh, Don, you be careful tomorrow, Don. You might feel. Everybody deals with it differently. I had a friend who got like the chills and headache and a fever. Others just didn't feel good, a little achy. My daughters they all got it like a different. Everybody felt a little bit different. So you never know how it's going to affect you. So just keep your schedule light tomorrow. Definitely will do, Scott. We'll make sure that somebody gets a hold of you. And thanks for your interest. I'll take over for you, Don, tomorrow. Don't worry. So yeah, just yeah, like I said, I don't know how it's going to affect you. Everybody's different. So just kind of have a light schedule tomorrow. So don't light trading tomorrow. Don't overtrade. All right, we're getting a little bit choppy here. Well, I wouldn't say that, Don. I mean, you do trade, so it could take a lot out of you. Give yourself a little credit. Come on. Yeah, it's a weird trade today, right? I mean, it's really a strange little trade today. I don't know what it wants. It doesn't know what it wants to do. We go from the highs down to the lows, and then they come back up to the highs, come back to the middle of the range, and then just kind of die out here. With all the Fed speaks today, you know, all right, again, coming back here to our blue band. Be a little bit careful if I'm taking it this time around. So basically, we're kind of drifting back here in the middle of the range. So very kind of really doesn't know what it wants to do even. So let's just be patient. Again, I wouldn't touch the 65 or 64 area this time around, even though it might work. It doesn't really matter because it's a lot riskier. And we've had some nice trades this morning, so there really is no reason to force the issue, right? Sometimes you overtrade because you feel like you have to trade, but today we had some nice winners, so technically we don't have to overtrade, right? Right, right. Again, like I said, it's a lot riskier this time around, so I would not touch it. Uh, I don't look at it per se. Maybe I look at it during the day, but I think that volume profile, it's like market profile. It's good for you, but don't stare at it too much. Don't lean on it too much. How's that? Oh yeah, we did use market profile on the floor. It was a really good tool at the time, and they used time factor. They don't use time factor anymore because of uh, it just doesn't work as well as it used to before. They use the volume now. That's what the question was about. Actually, it was uh, using volume to. It's just a way of our profile was a way of using time factors to go through certain levels that can find a little, uh, how long you stay in an area and then try to break out of it. And the same thing happens with volume. You can it'll stay in a value area, creates value around a level, and so it stays in that value area for a while. No, it's just a concept. It's an idea. You can actually get if you have, like I said, they use volume now. So when you have the value that's created around the price creates volume at those prices. So the bigger those volumes are around those prices, then that's the value that's created at a price, at an area. You break above or below that area, you get thinned out levels, and then it creates another value area. So sometimes those value areas on the top end and the bottom end are where they'd like to trade. That'll create support and resistance areas at the top end and the bottom end of those value areas. Make sense? They use it with time factor. So once you stayed and you stayed in a time area warped for a while, and then once you break out of it, then you can use that to help you go on to the next level. But because of electronic trading and everything like that, they've shifted to to looking at it at volume instead of price. Time, not price, time. All right. Again, like I said earlier, we don't have to trade. Now you can pick your spots in trading. We've had a few nice winners this morning. As a lot of trades for the first hour of the day today. We can't complain. Yesterday, like I said, it probably took us an hour to find one trade. Today, obviously things are a little bit different. It's nice. And our motto here is to make sure that you always come back tomorrow, because we could always have a bad day, and just don't make it a terrible day. We also talk about when to shut it down in case we are having a bad day in our education course as well. So that all of that is important. When we say, okay, we'll be done for today, and we'll look for tomorrow as when we come back tomorrow. So any of that stuff, like any of the things I say, we all definitely talk about in our education course that we have. And again, it's separate from the our daily trading room here. Well, I got the bottom end. I got the bottom end figured out with you. I'm agreeing with you on the bottom side. Top side too, probably. All right, next level of support we have, again, don't really have anything we used our 56 already, so that's not doable anymore. Really, we don't have anything down till 47. Yeah, well, okay. Well, we both have that one, so we're good there. Let's see if it went out. If something happens. It was windy, a little windy, but you know what? It wasn't cold, so it wasn't cold, but it was definitely windy. All right, we continue to downtick here. Really, like I said, next level support we have is you'd be stepping out here to buy the 56 if you are. It's a lot more risky now, even though it is our first level that we had, but because it already got triggered, we don't like to use it anymore. So like Monday I played and it was windy and it was a little chilly. And yesterday I played, it was windy, but it was not too cold. It was like California weather. That's what I was thinking. You could have worn your slippers and been okay on the golf course yesterday. It wouldn't have got cold. Your first slippers that you like to wear around town. All right. Well, we did again. It's a little risky, like I said. Doesn't mean it's not going to work, but it's just again you have to know when to trade and when to lay off. All right. So we're just kind of floating back and forth here again. Patience is important. We had a nice few opportunities before. Now we got to be a little bit patient now. And this is a time when it gets choppy like this to kind of just, hang and let the markets do its thing. It's kind of hard to, we think it's going down, but it has these like big rallies in the middle. Really, the only thing we do is kind of wait for the next support level on the downside, which would be the 47 area. All right, we've come down here to these lows. Again, we're not only if you were a little aggressive that you take the 54, 55 area again. But again, like I said, we can just wait for the 47 down below. That's our next good area of support. It'd be a little riskier if you did take this little dip back down there. Obviously, aggressive and you took it, and you did all right with it. Again, everybody's got different risk tolerances. They see markets differently. So, just because I might not take it doesn't mean somebody else might not. Now we continue to downtick. Like I said, next support level we have is down at 47. And we do have, like I said, a whole slew of um, people talking as the day goes on. So keep that in mind. And we also like to focus more on the morning hours to help us with our opportunities here. We feel like, as you can see, some of the volatilities have already been dried up or sucked out of the market here a little bit. So keep that in mind if you're trading. But as morning session here comes to an end, we've had a good morning so far. Looking for the 47. On the upside, the resistance would be around the 64, 65 area. All right, continue to downtick here a little bit. All right, there, Mark. You have a good one. Yeah, we're going to have a class later on this afternoon, 12 Chicago time. All right, we'll see you later. All right, we quickly come down here to the 47 area. A little bit of pressure on this market. Again, no matter what, keep your stops in. All right, we'll continue to downtick here. Like I said, we got to keep your stops in there. Can't let any of these levels get you carried away. Again, we drifted down to 43 and change there. So if you got stopped out, we get it. And now, again, we're looking down at the 40 area. Again, we're not, we have to pick your spots here. And like I said, we didn't have to do anything before that. And you don't have to do anything now because, like I said, some of our traders already done for the day because he did all right this morning. Like, yeah, pick your spots. All right, we're just kind of just floating back up here a little bit. We dipped down to 43 area, came back up. We had the 47, so if you had to take a little bit of heat on that, if you did manage to, if you manage that trade, then you did okay with it. If you took your stop, that's fine too. Next, we'll look for the next opportunity here. Well, that's good. You got through. That's all that matters. Good trade there, HD. Nice trade. Way to hang in there with that. Yeah, the volume does help. Watching the volume there a little bit does help. That's for sure. Just another little trinket in your toolbox, that's all. All right, next level of downside we have is down at 40. Getting a little bit choppy here, as you can see, kind of moving around all over the place. A little to the downside. Yeah, fighting the market. Yeah, yes, that is definitely the case. All right, we're on the lows here, kind of hanging. Did not make a new low there, so kind of see what it wants to do here. The 64 area would still be some good resistance. Getting very, very choppy here as the morning session comes to a close here, so be a little bit careful. Downside support, you have our levels downside. We have 40, 33, 25. Upside right now, a little aggressive there if you take it to 56 area. Otherwise, wait for the 64. If we get above 71, I think we rally back up to the highs. So we have our parameters here. We don't know what's going to happen, but we do have a lot of Fed speaks. And this could be the reason that we're getting a little volatility here. And so you have to be a little bit careful of that. We've got a lot of guys talking. We have Biden talking at 12:15. So there's an auction at 12, bond auction at 12. Some other guys are talking as the day goes on. Very, very fun-filled day as far as people yakking away. So that could definitely be affecting the market, getting some volatility in it. So keep that in mind if you're trading. All right. So again, we're also going to have a class later on this afternoon at 12. So we're going to take a little bit of a break now. We'll get back here in a bit.
Hey, a couple quick programming notes. If anybody has any questions about our services, don't hesitate to post them. Hey, John R. Hey, John, I reached out to you yesterday. Just let me know if you're tuned in now. That's for John R. Hey, Ian, welcome back. Hey, Dove, it looks like you're all set on the back end. Not a problem. Just let us know when you want to pop back. Hey, Sam, nice to see you. You got it. You feel better, okay? And I don't know, you had mentioned that you might be interested in Sol's intensive. Not sure if I got that from your message, but I think that's what you mentioned. And we can also talk about that then, when you're ready. So John R., let me know if you are there. We've been taking a vote thinking that you might be a bot, John. I'm not sure. I think you're not. My vote's with you, John. Not a bot. For those that are coming on the outside, join us on the inside. I did post a link. And we're going to be exiting right now. And thank you.